You didn't start trading to lose. But here's the truth nobody warned you about. Losing is exactly what will decide whether you make it or disappear. You came in with a vision, daily profits, freedom from your job, maybe even trading from a beach somewhere. That dream is powerful, but right behind it is a reality most people never prepare for. You are going to lose a lot. And not because you're dumb, not because the market is out to get you, and not because you're missing some secret indicator that only the pros have. You lose because, without realizing it, you're playing the wrong game entirely. Trading isn't about who wins the most trades. That's the illusion. The real game, it's about who knows how to lose properly and who can stay alive long enough for their edge to actually work. That's what separates the few who last from the many who burn out. And once you see this clearly, everything about how you approach trading starts to change. Most people begin with a quiet assumption running in the background. If I'm good at this, I should barely lose. It sounds logical. It feels right. But then reality hits. A drawdown shows up. 3 losses in a row, then 4, maybe 5, and suddenly doubt takes over. Something's broken. My strategy doesn't work. Maybe I'm just not cut out for this. Everyone else seems to be winning. Why am I not? That internal spiral is where most traders fall apart. Because the truth is uncomfortable. Even world-class traders don't win most of the time. Some of them only win 40% of their trades. Think about that. Less than half. But here's the part that changes everything. Their losses are controlled and their winners are allowed to grow. That's the edge. That's the difference. And the gap between what you expected trading to be and what it actually is, that gap is where most accounts die. You were taught to aim for being right, but in trading, being right isn't the goal. Managing risk is. That's the shift. That's the turning point. Professional traders don't sit there trying to predict the future like fortune tellers. They don't need to be right all the time. Instead, they operate with a completely different mindset. If I'm wrong, I want to be wrong small. If I'm right, I want to be right big. That's it. Clean, simple, powerful. So instead of asking yourself, how can I win more trades, flip the question. Ask, how can I structure my trading so my losses are small, planned, and boring? Ask, how can I build a system where a few strong winners easily cover a series of small losses? Because once you truly understand that, you stop trading like a gambler chasing wins, and you start operating like the casino, where the math is always in your favor. And if you've ever held on to a losing trade longer than you should, you already know how dangerous this gets. You tell yourself stories. It'll come back. It's just a temporary move. Let me move my stop a little lower. But underneath all of that, there's something deeper. You don't want to admit you're wrong. Closing the trade makes it real. It locks in the pain. So your brain starts negotiating with reality itself. If I don't close it, it's not really a loss yet. But the market doesn't negotiate, and your account definitely doesn't care about your ego. It only responds to numbers. The traders who survive aren't ego-free. That's a myth. They just have systems and rules strong enough to keep their ego from taking control when it matters most. Then there's social media, which makes everything worse. You open your feed, and it's all massive wins, plus 300% in a week, turning $100 into $10,000, perfect equity curves that look like straight lines up. What you don't see are the months of nothing happening, the painful drawdowns, the accounts that quietly got wiped out and never posted. But your brain fills in the gaps. Real traders win all the time, so if I'm losing, something must be wrong with me. That belief is dangerous. Because in reality, professional traders take loss after loss, small, controlled, uneventful losses. They sit through boring phases where nothing happens, and then a handful of trades do the heavy lifting. Their short-term results look messy, even unimpressive, but underneath that, the math is working perfectly in their favor. And that brings us to something almost no beginner actually checks: expectancy. This is the backbone of everything. It's not about how often you win. It's about what happens when you win versus what happens when you lose. The equation is simple. Your win rate multiplied by your average win minus your loss rate multiplied by your average loss. If that number is positive, your system works over time, as long as you survive the ups and downs. If it's negative, you're slowly draining your account, no matter how confident you feel. But most traders never calculate this. They don't track their trades. They don't know their real numbers. They're trading based on feelings, guesses, and recent outcomes. In other words, they're trading blind. Professionals, they don't obsess over individual trades. They focus on the long-term math. Let's make this real. Trader A wins 70% of the time. Sounds amazing, right? But their average win is small, +1R, and their losses are big, -3R. Over 10 trades, they win 7 times and make +7R, but the 3 losses cost them -9R. Net result, -2R. They look like a high win rate hero, but they're bleeding out slowly. Now look at Trader B. They only win 40% of the time, less than half, but their average win is +3R, and their losses are just -1R. Over 10 trades, they make +12R from winners and lose -6R from losers. Net result, +6R. They lose more often, but they win the game. So who survives? Not the one with the prettier win rate, the one who understands how to lose small and win big. To build something that actually lasts in trading, you don't need complexity. You need 3 solid pillars. First, method. A clear, logical, testable system. What you trade, when you enter, where you exit. Second, risk. Defined limits. How much you're willing to lose per trade, per day, per month. Third, psychology. Your ability to follow your rules when emotions hit hard. Ignore even one of these and things fall apart. A great method with poor risk management leads to a blow-up. Strong risk with no method turns into random guessing. And even with both, without discipline, execution breaks down. Most traders unknowingly fall into the same 3-year trap. In year 1, it's pure emotion, trading based on tips, hype, and guesswork. No structure, no consistency. In year 2, they chase knowledge, indicators, patterns, complex tools. Charts get cluttered. Confidence rises, but results don't. Then year 3 hits, and they blame psychology. I just need the right mindset. But here's the hard truth. Mindset alone can't fix a system that's mathematically losing. You need both, a real edge and the discipline to execute it. So how do you actually move toward that small group who survives long term? First, accept that losses are part of the game. A loss taken according to plan isn't failure, it's business expense. Second, define your risk clearly. Know your limits before you ever enter a trade. Third, simplify your strategy. One setup, one system, master it. Fourth, test it properly. Gather data, measure your expectancy. If the numbers don't work, fix it before risking real money. Fifth, trade small. Focus on execution, not profit. You're building skill, not chasing quick wins. And here's something most people overlook. You can train yourself to lose better. Before entering a trade, say it out loud. If I'm wrong, I lose this amount. That forces acceptance up front. Then commit to a 20-trade challenge. Same setup, no deviation, no matter what happens. This builds consistency. After every trade, journal not just the result, but your emotions and whether you followed your rules. And most importantly, start celebrating good losses. If you followed your plan and took a controlled loss, that's a win. You're reinforcing the behavior that leads to long-term success. Because in the end, real trading isn't exciting. It's not flashy. It's not heroic. It's repetitive, structured, disciplined. It's showing up, executing the same edge, respecting risk every single time, taking small losses without hesitation, and letting the right trades grow. You don't need to predict every move. You don't need to be a genius.
You just need to still be in the game. So don't aim to be the trader who never loses. That's a losing goal. Aim to be the trader who loses well, because over hundreds of trades, it's not the one who wins the most battles that survives. It's the one who never gets wiped out.